Phoenix, how's it look from out there?
Zeke are 300 deep in Greengold's house.
We gotta hold for backup.
He's dead if we wait. We gotta get him out now.
Shh. Silent.
Target's 12 o'clock. That checkpoint is rigged with an alarm.
You thinking diversion?
We lure in the Zeds and take the heat off Greengold.
Agreed. Let's pick up these slackers and set up defenses.
Get it off, mother! That was too close.
Now that's a weapon. Found the defense kit. What's here? Good enough. I gotta get meds. You're pissing me off!
On the bridge. That must be the alarm trigger.
Alpha, you woke him up. Get ready.
Shit. This is fucking crazy. Who's next?
Reloading!
Here they come! One after another!
Silence that son of a bitch! Reload! Put the screamer down!
I'm reloading! The bull never wins, mate!
Fire, huh? I'm reloading!
Oh, one stop! Throwing him down!
That's
Alpha, enemy dispersed. Your route is clear.
Gringold's a sitting duck. Move out!
Gate's going up. Let's go.
Greengold better be the real fucking deal, Wolf.
Fucking lasers from space.
I sorted test fine. Melted a MacArthur tank.
Get your ass in here and seal the door.
Alpha, the situation at Greengold's is
Upstairs.
going south.
Exit at the back to Gringold. We gotta go! Much better. Reloading!
C4! Let me know where to put it.
I see you, Alpha. You're coming up on the objective. Head for the searchlight.
Thank fuck. Let's make this fast.
Alpha, you have targets moving on your position in force.
Copy that. Get to the house. Fast!
Oh, shit.
Are we too late? Hello? Anybody alive in here?
Up here! What do you got?
Phoenix, we got the dog. We're shipping out.
Negative, Alpha. They're almost on top of you. You'll have to engage.
No going back now. Let's go.
Let's get this place locked down. Going silent.
Charge is live!
Doctor, you okay?
I thought I was dead.
I'll take that!
Okay, I'm ready. Something you should see here.
All right, let's do this!
There's the swarm! Hazmat inbound! Silence that son of a bitch!
We got a local!
Sit tight, Doc. Okay. Spotted a lurker!
Swapping out!
One after another! Take them around now! Coming in! Reloading! Mowing them down!
Screamer's bringing in more tea!
Got the screamer.
Don't go ahead there, please.
I'm on it!
Guy, I'm shooting them. You're standing there. Don't put your head there, please. Move!
Swapping out! Ah!
Drop the gas bag! We got them all!
I think we got them all.
Payback time.
One after another!
Now maybe you'll...
Alpha, nothing moving out here. You're clear.
Doctor, we're leaving.
Can't leave without the launch codes.
What?
Launch codes. Without them, the satellite is useless.
Where are they?
Okay, I've been tracking them. One is at the hospital and one is at the consulate.
Are you fucking kidding me?
Oh, suck it up. Let's find the damn code.
Found a hammer. Anything?
Look over here.
We're totally exposed. Look at all these open windows.
I got one of the cases. Nice work. Let's find the next one and get out of here. Doc, grab whatever you need. This won't take long.
Found the second case. Heading to the dock. All coming in.
Green Gold, our base has a satellite link. Can you use it?
No, I can only reactivate from the primary terminal.
Where's that?
The Rohaan base, in the desert north of here.
Alpha, Rohaan has a Mossbat auto anti-air system. We'd be shot down.
Take out that screamer! And for the screamer!
Son of a bitch.
Regroup! Just get your asses in here. Let's go. Okay, I'm ready. Phoenix, you ready? We're coming out.
Copy. Moving to console at helipad.
This way! We can use the rooftops to get there.
Alpha, I have a visual on you. I see you.
Come on, Richard.
50 cows ready and waiting.
We're going in!
Who's next? It's open. Let's go. Come on, you sons of bitches!
This'll do. Ah, yes, this will do.
Alpha, they're climbing the wall toward the chopper.
We got another swarm stacking up! They're down. Let's go.
Take out that screamer!
Cut the screamer down!
On our way, Phoenix!
Shit! Zeke snagged the tail rotor.
Get some! I need a drink. Reloading! Come to Dada! Who's next?
How much longer, Phoenix?
I need more time.
Whoa, whoa, whoa! Friendly fire! Not too shabby. Watch that goddamn lurker! Swap it out!
No more lurkers.
We're going in!
Keep coming.
everybody okay? Anyone get bit?
I'm okay. I'm okay.
Look at them. They never stop.
We could fight our whole lives and never make a goddamn difference.
I think I can help with that.
ये घर कहाँ उधर दिख रहा है?
Hi, Kaushik sir. Good evening.
Hi, good evening.
How are you doing, sir?
I'm great. Tell me.
Great. Great to know, sir. Thank you so much for your time and thank you so much for joining this call.
Okay.
Really appreciate it. Welcome to Deserve.
Thank you.
There's some context to how I usually do these calls. So first, I tell you a bit about myself and my role here at Deserve, and I would also love to know more about you and what's your entire
We've been
journey
walking
been.
for miles.
And then I'll just
It's
give you a
almost the
brief
same.
introduction of
We're
Deserve before we
lost.
get into your
We're
portfolio.
almost at the
Just
twins.
discuss the
Trust me.
differences and opportunities we have.
Okay.
So starting
It's
with me,
been
sir, as you can
5
see, I'm
days.
Cameron
Admit it, they
and I'm your
abandoned
client
us.
financial partner here at
Something
Deserve.
must have happened
Now,
to them.
with this role, what I help my
Either
clients
way,
do is
we're
very
on our
simple. I
own.
help them optimize their portfolio so that
We go to the
their
metro
investments at
station
all times work
and find
towards
out
their
for
financial
ourselves.
goals. I've done that for a lot of clients. I'm also an semi-certified wealth manager, born and brought up in Mumbai, recently ordered the Deserve Mumbai office.
I think we're being
So
watched.
that's a bit about me, sir. I would love to know more about you.
This portfolio is on my mother's name, but I manage entire portfolio for me, myself, and my brother too. So this is just one portfolio. There are a few other portfolios are there, and I was working with a bank. Now I'm providing consulting services to those banks. I've been
Yeah, I think I saw on LinkedIn, sir. It says you Kotak.
Yeah, I have been with ICICI, then Kotak, and then Equitas.
Okay.
So right now I'm providing consulting services to those banks, and other things are there, like the trading in stock market trading and all that.
And I just also that you also had a ARN number. So do you also do mutual fund distribution?
I have a ARN number, but I do not. I have not started yet. Initially I thought, I'll be doing this mutual fund business before, but then, I just dropped off because I was having another opportunities. I was focusing on that.
So any plans anytime soon to start?
Probably. We'll start. I'm thinking to build some of the portfolios so that, the steady income can be there.
Understood. So you're also thinking of getting into like managing and advisory kind of thing.
Yes, correct.
I'm
So
fucking
great.
starving.
And just some
Imagine that,
context to
Nidesh.
how's your investment journey been? What's your sentiment over there?
Investments, like, it was not initially planned anything. As you can see, like, when I enroll my portfolio to deserve, it says somewhere around 70 lakh rupees of missed gains. So yeah, it was not initially any planned properly. But yes, I was doing it like in a bit while I used to check on that. That's it.
Understood, understood. And you said so that you have your own portfolio and brother's portfolio.
Yeah.
So just on a family level, what would be the size of your family portfolio?
Total would be somewhere around five and a half.
5.5. Great, sir, great. So that is one option. So you have a family portfolio primarily in mutual funds. That is something you can also add in the app and check, how's that.
No, but primarily it is not in mutual funds. Like, mutual fund is somewhere around only 50 lakh rupees. Most of the funds are is in stocks, and that is what my concern area is. Like, I could not have enough time to rebalance those things. And you must be able to see that there are somewhere around some 86 scripts. There are so many scripts. So but I could not keep track of all those scripts and all. Some of the investment, for example, if you might have seen that, I have Yes Bank from last 3-4 years, and huge, somewhere around 35 lakh rupees of amount has been, I think it is blocked over there. I believe it. So, with this call, I was expecting, like, okay, how and what we can do with this stock portfolio. Mutual fund is, I think, it is going good.
Mutual fund is good, but I will tell you one thing here, sir. 100% in ICICI.
Yeah, no, that is my mother's portfolio only. My mother's portfolio is in ICICI entirely.
Yeah.
Otherwise, the rest of my and my brother's portfolio is distributed.
Yeah, that I'm getting because you were in ICICI.
Yeah. And this was like, this was kind of an SIP. Initially, in 2016, SIPs, I have started, and this portfolio has built up from SIPs only. This 50 lakh rupees.
Yeah, and that is, I mean, anyone working for a bank, that happens. So that is understandable.
Yeah.
I have a lot of friends who work in banks, so that is, and there's a lot of, I think, regulations also which you'll have to follow when it comes to investing.
Yeah,
so that makes sense. And your mutual fund portfolio, as you rightly said, is doing good. The stocks, with the majority being in stocks, that is what is taking the maximum. So just, before we get into your portfolio, I just wanted to understand how did you come across Reserve, and what were your primary expectations for this call?
Reserve, like, I knew it before enrolling into this application. I knew it. I came across a lot of ads and all, and since I was from the financial industry, I keep track of all different services which are available in the market. So this is what it is. And from this call or from Reserve, I expect to know how and what balancing we can do with this stock portfolio, because it is a bit. If you must be able to see that there are very less transactions in that stock portfolio. I have not redeemed anything. As and when something comes up, I just do a little bit of transactions, but not significant.
Yeah, no, fair enough, sir. That's what happens, right? Stocks, a lot of people do buy and hold. But what happens is that in that entire cyclical nature of the market, if you don't rebalance, that is when you end up missing out on gains.
Yeah.
And it's no one's fault because, after all, you have your actual job to look into, which is what takes most of the time.
Absolutely.
So, stocks, you cannot, keep a track of every company, their performance, their, future outlook, and then take a call and then keep changing it. That becomes very impractical in terms of time and effort which you have to do. So one thing which is why what we do is we not only say but we also practice that on the equity side we invest only in direct mutual funds. Why do we do that? Because it's a much more efficient way of investing, right? Firstly, as a PMS of mutual funds, the level of churn that we need to do for a client's portfolio to ensure that it is, aligning with market conditions comes down drastically.
Right.
This does not happen when you invest in stocks because you have to keep doing that stuff. In this case, the mutual fund manager, fund manager itself has a level of churn to align with the market, and then we select funds with a positive future outlook based on research and data which we.
Correct.
Second thing is in mutual funds, the best part is that all your dividends get reinvested. So as you said, so that when you need something, you make a debit from that portfolio. And the other thing is dividends when in a stock portfolio get credited to your account, you're paying your tax slab taxes. But again, in a mutual fund, because it gets reinvested, when you're taking out, you're only paying the 12.5% capital gain. So that is why we do only direct mutual funds. And I'll take you through what Reserve does and how we take care of things. But first, let us just have a look at your portfolio. Just give me a second.
Yeah.
Can you see my screen, sir?
Yeah, I can see.
Okay, great. So just a quick intro of Reserve, sir. So we are portfolio managers. We operate in a PMS structure, which means basically what we do is we build and manage portfolios for our clients across different asset classes like equity, fixed income, and commodities. Now we've done that for about 10,000 plus clients, and our current assets under management overall stand at almost 17,000 crores. Professionals such as yourself, business owners, we cater to the affluent families, the affluent individuals of India, ensuring that all their investments are aligned with their financial needs. Just some background on where we come from. So these three gentlemen, Sandeep, Sahil and Yadav, all three of them have 20 plus years of experience in the wealth management space. And after spending so long, what they realized is that there's a lot of good about the industry, but there's a lot of gaps as well. Where there are portfolios of 3 crores, of 10 crores and above, which do not get the kind of time and attention they deserve. Why? Because people building their portfolio obviously are putting in that effort in their full-time job. And that is where the neglect happens. So that is what they found it reserved for to solve for it. And we operate out of 5 offices. So Mumbai, Pune, Bangalore, Hyderabad and Delhi. No office in Gujarat as of now, but hopefully that will be the case in the future. So that's a bit about Reserve. So before we get into your portfolio, do you have any questions, anything like that?
No, please go ahead.
Understood. Any questions, so please feel free to stop me and we will address it then.
Sure.
So this is a portfolio value I have. So there invested amount was 2.8 crores. Current value stands at 3.4. Here, just to call out, there were quite a few instruments which were not fed because from the account aggregator and the central database, there was some incomplete data when it comes to the stocks.
Okay.
So this has not been fed, sir, but is it okay if we go ahead with
Yeah, please go ahead with this right now.
Absolutely, sir. So,
I can.
As you saw on the app, and what is happening is that when the benchmark is done about 14%, right? Your portfolio has done only about 9.2%. Now, what is this benchmark? Simply, it's an apples-to-apples comparison which we did. Let's say your portfolio has a large cap fund or a large cap stock. What we simply do is we compare it with the large cap index.
Right.
Similarly, with the mid cap index, small with the small. By doing this, so what we get is an accurate, picture of your performance.
Right.
And as you see, you have 63.5 lakhs in listing.
Yeah.
And rightly mentioned by you that list gains comes maximum from your stock portfolio. So if you look at your mutual fund portfolio, all of those funds are outperforming the benchmark. But when it comes to your equity portfolio, it's quite aligned. So When did you purchase something like Reliance Industries, sir? Is it recent?
No, that was long back, very long back.
Correct. So that is what happens. Like, you see the XR, large cap index in the same time has grown about 14%. Whereas your investment has not, I mean, has given no return.
No returns, yeah.
And for amount of 22 lakhs not to grow in so long, that is where the issue is.
Correct.
And what we always say is so that you should do stock markets and you being in the financial industry yourself, you would know that stock markets are fun. There are ups and downs, but it is that thrill, that adrenaline of investing you cannot replace. But what we always say is let that be 20% of your portfolio. You build your portfolio in a safer, avenue, in an avenue which compounds equally well, but at the same time takes away the heavy lifting from it, which is mutual funds in this.
Right.
And you would know, sir, that in mutual funds, I would say, is like government's favorite kind, right?
Right.
There's a lot of push. Why? Because it is a very efficient and a very effective way of it. So that is where we are when it comes to the performance of your portfolio. But more importantly, what we need to understand here, sir, is that why this performance, right? What is it about the structure of your portfolio that is leading to this performance? And there we see a couple of things where, we look at how you invest, the mode of investment, the concentration, diversification, and so on. Now, mode of investment, there's no problem because your mutual funds are coming direct and the regular ones are matched to your ARV. And then stocks, I'm assuming, sir, you know all stocks by yourself, or do you use any advisory, anything?
No, it is like from since 2015, as in when there are funds available and the information available at that time, based on that, I used to do that.
Absolutely, and that's great to do it yourself, sir. But you'll see, right? Like you also pointed out that you always kept purchasing, stocks, and now modern technically I have almost 80 instruments. So 80 different stocks plus the stocks which didn't get fetched, so you have almost 90 stocks. That simply means it's like running your own two mutual funds. You do not need a fund manager, so you are your own fund manager.
Yeah, but sure, performing very badly, you can see.
Yeah, that happens, sir, because you would have taken a stock which was doing well. And it would have done well for quite some time. But you would also know, sir, something like, let's say, IT. Post 2020 for few years, it gave excellent return.
Correct.
Then it crashed with the AIA. Let us take an example of PSU Bank. Again, post 2020 with UPI, with digitization, the stocks did extremely well. But if you see now, currently year to date, it has given about 0.5% of it. So that is the point, so that how often will you keep a track of all the industries you have invested, then look at the company, then look at the balance sheet, and then get a comprehensive report. That is not possible as one person. Which is why keep that 20% in stocks, move the maximum to mutual funds, and then again what becomes important is active management. Whether you put it in mutual funds, you put it in stocks. Active management becomes very important to compound your money. 63 lakh in this game is a huge amount of money.
It's a huge amount, yes.
And what is even worse is that, those 63 lakhs, let's say today we are sitting here, each day that 63 lakhs could have compounded.
Absolutely, yeah.
So that is the actual, cost of missing out on game. And the point is, you cannot get all calls right. You will not have all stocks do well. You will not have everything do well. Even in a mutual fund, you will have, some amount which might not do well. But that amount which does not do well should be around 20% of your portfolio, not such a huge part of your portfolio.
Correct.
Like 79 instruments, sir, is, you look at this also, right? Top 5 instruments make up for 30%. Which means there are, like, let's say on average, the remaining 74 instruments with less than 1% allocation in your portfolio. So there's a long tail, there's a huge amount of concentration as well, right? These are the problems which lead to those misbehaviors.
Correct.
So that is one more thing, sir, that we need to solve for currently. Mutual funds, as you know, there's no complaints here. I mean, apart from the ICICI concentration, definitely it's ideally diversified. And then, sir, coming to this part also, just wanted to understand, how much of a conscious call do you take here when it comes to market cap allocation?
Not exactly, I did not focus on that, market cap at all. I was just focusing on the companies. Whenever there is a news, when there is an opportunity or kind of thing, I used to just invest like that. There was no, any background thought behind the cap, as far as the capitalization is concerned.
Fair enough, sir. And in the last, to be very honest with you, in the last 2 years, the kind of market we have seen, this allocation is decent because you have maximum in large cap, which if you look at 2025 was the best performing market.
Yeah.
So anyway, markets didn't give a lot of return, so you got that large cap stability. But
in fact, sorry to interrupt you, but in fact, before this, era, this war scenario, I think the entire portfolio was crossing 5.5 crore rupees. I think because of this war scenario only, this portfolio, whichever it is, the loss you can see right now, because of this war scenario, this was in last 3-4 months only. Anyway, your point is valid. The concentration is very high on single capital market.
No, and you're right, sir, that the war in the markets a huge thing, and that is one factor. But that's the thing, sir, that when something like that happens, you have to build a portfolio that is resilient for the next one.
Correct.
What happens usually is that as a retail investor, what you always end up doing is react.
Correct.
It is always better to be proactive when it comes to fund selection, and war definitely you cannot predict. But if your portfolio in the last 3 years would have been stable, right? The war would have not had such a huge impact.
Correct.
Because your portfolio, I think, would have been hit a lot because look at the stocks and then the amount of FII outflows that have happened since the start of the war. That would have hit your portfolio really hard. So that is where you just need to optimize, and best way to do it is mutual fund. Honestly, I don't even need to tell you that, sir, because you can see that in your portfolio as well. Right?
Yeah.
The mutual fund part is done best.
Yes.
Because a fund manager at his or her level, the kind of resources they have to take those calls on the market is obviously much more than any one person can take, whether it's you, me, or any retail investor. So that is the whole point, and then lastly, coming to looking at how your instrument selection is actually. Here one thing, if you see, so that again, mutual funds have 100% outperformance, they've done really well. When it comes to your stock portfolio, 60% is underperforming the benchmark. And that means also, and the problem is not just underperformance. So you see, stocks like HDFC, like Reliance, the gap is so huge.
Absolutely, and see the names. You look at the names, HDFC, the Reliance. Who could have imagined that these two giants will give you almost negative returns?
Exactly. Both are large cap, and people were actually shocked that these are stocks which people holding their portfolio out of the list that they will always do it. And they have they practically no returns if you look at it.
Absolutely. Even this is not savings account return, in fact.
Exactly. 3.4% post-tax FD returns also are more than this.
Absolutely, yeah.
That is why, sir, I will, from a point of view of this, compounding your wealth, I would say you need to look at first moving the money into mutual funds. And retain those 15, 20, 25 high conviction stocks if you want to continue. That is the best approach for your money to come. So what happens is that at a portfolio of 10, 20, 30 lakhs, I can make as many amount of mistakes as I want to because it does not affect my portfolio at all. At a level of 3.5 crores, every percent is 3.5 lakhs more. So that is the issue here, that you should not be taking very risky bets. Which trading in stocks becomes a very risky bet. You move it into mutual funds, you do active trading on the small amount of money. Even if you keep 40-50 lakhs for trading, that you can take those good funds. But maximum, sir, move it into mutual funds, look at how to optimize it there. Because that's how you will be able to actually bring that.
Correct.
And from here also, the markets are at a great point. If you look at the market right now, FI ownership in Indian equity is at about a 14-year period. And, crude oil has corrected to pre-war levels.
Correct.
And from here, what happens is that the rupee can get that stability and that strength. The reason for the falling rupee was because of the amount of, the import bill, the extended import bill and all of that.
Yeah.
So right now is the best time to realign your investments.
What do you think? Just a side question. What do you think? The Nifty. If you look at the market today, it is somewhere around 24,000 rupees. Nifty. What do you think? How deep it can go from here? Because looking at the war scenario, again, they have started again. On Friday they were saying like
there was a ceasefire violation.
The ceasefire violation, and then again they have started again. So I was calculating of probably I was looking at 22,000 will be touched very easily.
Yeah. Also, it's a couple of factors. If the war, I think anyone should stay away from predicting the war, because the person in charge of US right now, no one can predict. I mean,
absolutely.
The most experienced political strategist.
He is making the most money. You must have come across that. He is making the most money. Most of the money he is taking out, most of the chunk. Because he is the guy who's moving the market today.
Yeah, it's only the manipulation of market.
Manipulation, yeah.
I saw a report where 35 times he said we are close to a deal. I mean, these are those high volatility stocks.
Absolutely.
Which you cannot predict that on.
Absolutely.
So that is one thing, but I think overall, if you look at the Indian market, the remaining macro indicators are in our favor. And in fact, I'll send you a note also we had on the Iran-US war. You can go through that. So right now we feel the remaining macro indicators are in our favor. FI inflows also should stabilize.
Okay.
So that is where we feel that this is the time to actually invest in any rupee asset. Whether it is equity, whether other rupee assets, from here on the market will do well. And to be very honest, if you see after 2020, the market had a phenomenal result.
One more side question. Sorry, just because it just came across me. Because of this El Nino effect, we are going through the news right now. The monsoon is going to be very weak, and again this war situation and all. Keep summing up keeping all this situation in mind. Do you think market will cross 25,000 in next 6 months?
Yeah. So it will, I'll tell you why. So when you look at El Nino, right?
Yeah.
We are expecting a below average monsoon. That is definitely true. Yeah. But if you look at it, the agriculture part of the economy is around 12 to 15%. Now, if you look at the last time when we had below average monsoon, that's about 70%. It was way back somewhere in 2010. And what happens is that time there's not a huge effect on the economy overall, because agriculture is only a small part of it. I know we say we are an agrarian economy, but eventually now it has become a very small part of the economy. So somewhere around 2008 to 10, when the last time we had below average monsoon, agriculture grew by only about 0.5% or so. But the economy still grew at the normal pace. And when does it affect the economy is last time around 2015-16, there were 2 consecutive below average months. That is when the economy and the overall growth of the GDP got affected. Now if you look at the last 3 years, we have had 2 above average months. So we are still at a very stable level and it is not an alarming thing.
Okay.
So that is why we feel that there won't be any major impact. Definitely you will see some stocks which are, core agriculture get affected.
Absolutely, yeah.
You cannot help it. But overall on the market, I think El Nino won't have a major impact.
Okay.
And the war, I said, no one can predict, but the remaining macro indicators are in India still. Which is why we do not see any major issue here. Now, if you look at other emerging markets, you take Taiwan, Korea, America, you see that the outperformance which people have seen has come from one theme, which is AI.
Correct.
AI, semiconductors, and all of that. So that market is very concentrated in that one theme.
Right.
And if that one theme goes for a toss, so the entire stock market falls.
Correct.
India is not like that. Nothing is concentrated around one theme, which is why we see, from here, definitely war and all will play a factor. But you should be able to see moderate to high returns by optimizing your portfolio and making sure it is basically poised for that next growth. And I'll be very honest, like if you look at post 2020, you won't see the kind of returns we saw, in small and big. It won't be at a 50-60%. Because the correction post COVID was huge.
Correct.
It will be moderate to high returns depending on certain market factors. This is why, we actually, even people who have invested in this reserve, we are actually calling them up and telling them to put in more money because this is the right thing. Usually what people do is they look at last 2 years, they say, okay, market is not giving returns, let's remove. Let's not put in more. But this is the time when you purchase more in the market because that money has the most potential to do.
Right.
Just, so from your some context to learning, that's a bit about your portfolio, sir, if you look at it. Just wanted to understand if you have any questions until now.
No, going good.
Absolutely, sir. So, that's now from your portfolio, so just some context to how we also do things, right? Now, at Reserve, the simple funda that we follow is active management. So, how do we do that, sir? One thing we strongly believe is that everything else can, be market noise, you will have opinions, so many people commenting on the market. But one thing that does not lie is both. So what we simply do is we keep our complete focus on data. So when we pick a mutual fund for your portfolio, what we simply do is we look at data right from 2001 across 65 plus macro and microeconomic factors. So we look at, on the macro side, we look at the GDP, we look at the inflation, we look at the current account deficit, and 40 plus such factors. Now what this simply helps us do is so that it will tell us, one, which is the market cap which is likely to do well in the next 12 to 18 months, and second, which is the style of investing likely to do well in the next 12 to 18 months. So in 2024, right, when people were going gaga over mid and small caps, at the start of the last quarter itself, we moved maximum exposure to large caps. Why? Because we saw small and mid caps are extremely overvalued and there is a need to correct this. Now, by doing these two macroeconomic checks, what we simply do is, let's say 2000 mutual funds, it gets narrowed down to 1000 funds with a positive future outlook. Not on the basis of past performance, but rather what the market is likely to do in the next 1.5 years.
Okay.
Now, second level, sir, is that out of those 1000 funds, are the funds constructed well enough to make use of the market conditions? So there we look at 20 plus microeconomic factors. So the allocation in the fund to different market caps, the valuation of those stocks, the balance sheet of those companies, the earnings growth, cash flow, everything is looked at in detail to simply tell us out of those 1000 funds, which are the 500 funds which will likely do well in the next 12 to 18 months. Now here the difference comes at an institutional level, where my investment team will then go to these 500 fund managers and actually have a discussion with them to understand that how are they running the fund. So they see that they don't do any unnecessary churn, they do not take any risky bets, and then only they pick funds for your portfolio, which will actually do well based on data and is not based on any past returns or any market. So that's how we pick funds up. And then one more thing that we do is on a yearly basis, max 20 to 55% churn is done in your portfolio to ensure at all times it is aligned with the future. And the entire execution is automated. Everything is communicated to you as well that this is why we want to rebalance your portfolio because this is the opportunity that we see. And more importantly, on a quarterly basis, we make sure that we do a review with you not only of your reserve portfolio, but also of your external portfolio, your family holdings, to ensure that on a family level, so you are aligned with your goals. Because our point is not that, we should get that quick alpha for you, or we should just grow that 50 lakh portfolio for you. Our aim is that we want to be your partners in the wealth creation process.
Are you talking about this PMS services kind of thing or what?
Correct. We offer PMS services.
Okay. Okay. So that will be on mutual fund side or on the stock side?
No, so we do that on mutual funds. In equity, we do mutual funds because it is a more efficient way to grow your money. Okay. On stocks, the amount of churn and all happens, we do know so that, SEBI actually had a 25 lakh limit for PMS. Now, why did they grow it to 50 lakhs? Is because they understood that for a person who has 25 lakhs to invest, there's too much churn, so many unnecessary risks taken just to get that alpha. That product had become very unsuitable. Okay. Which is why we said, okay, that's the case. Why don't we do a PMS of mutual funds? Where it just improves the effectiveness and efficiency that, takes place in your book. Okay. So that is something we do, and then, sir, we believe in multi-asset allocation. You've seen the last year when equity didn't do well, gold has done really well. Fixed income is one more, thing that has come up. So we always, build multi-asset portfolio across equity, fixed income, and commodities. And that is obviously a collaborative call. So let's say you say that, okay, I have already a lot of physical gold in my life, lying around. Then you do not put money in commodities. So the idea is to give you a structured, plan for your wealth and not just focus on one asset class or one particular aspect of your wealth.
So, so what I understand is okay, do you do this kind of services wherein you can suggest which stocks to get out or probably to add something, do you provide that kind of services you want?
So one thing that we do is a discretionary portfolio management. Okay. So we do not do any advisory or non-discretionary deals. Okay. Because what happens in that setup is we can easily do that, right? Because we have those licenses from SEBI and all, but we don't do it because usually we give any call. Then that person is busy with their life, they might not do it. They might have their own bias, they might not do it. So let me just give you a wild example. You're from ICICI. Let's say tomorrow I have a client who's a disgruntled ICICI. But I tell them buy ICICI because it's a good stock to hold. They will not buy. So to avoid these kind of things, we do end-to-end execution, and that is how we grow the portfolio.
Okay. All right. Okay, one more side question. What do you think about this Yes Bank? Is it going to grow or what?
Very difficult to say, sir, right now. I mean, there's a lot of issues right now.
Yeah.
And I know you have a lot of allocation here, but it's very difficult to say right now.
I don't think when it fell down, I bought that somewhere around 18 or 20 rupees, and now it is, what is it? Yes Bank is somewhere.
Yeah, that is the issue, sir. And at what rate you bought it, sir?
It is around 22, 21 rupees, I think.
Okay. So that is what, sir, I mean, very difficult to say. It has really it would not look good for yes man.
Huh. Yeah, I was planning to get out of that.
Yeah, now anyway it has reached 25, so you'll be at a profit, I must.
Yeah, it is somewhere.
Yeah,
Yeah, I was planning.
the stocks are very difficult at the individual level. You should only do very few stocks. Better not to keep that maximum of your portfolio because when there's a huge drawdown, that affects the major part of it.
Right. So what are your charges kind of thing? Like, how do you charge on?
Absolutely, sir. Just before the charges, let me uh, quickly give you an overview of our strategies as well. So we have 4 flagship strategies across asset classes. So on the equity side, equity revival strategy is a multi-cap strategy where we invest in large, mid and small mutual funds. So with that multi-cap approach, large cap gives you stability, mid and small is what works for you dynamically to give you that alpha. Then let's say for someone who has a lot of other investments and who has a lot of core, who has built their core portfolio, we also say you should do some in this high risk high reward strategy, which is alpha focus. Now this only invests in mid and small direct mutual funds. So this is high risk but high reward at the same time. Then again we have a fixed income strategy which invests in directly listed secured corporate bonds. And then a commodity strategy. But right now I would say commodities is not the best asset class because gold was at an all-time high recently.
Yeah.
So this is how we build a multi-asset portfolio. And coming to the fee structure, sir.
Yeah.
So here, what we simply do is we believe in transparent fees, which is why we invest in direct funds, right? So we don't charge anything from the AMCs. We don't take any commission. We have 2 simple, straightforward fee plans. So one is a fixed fee plan, sir, where you pay 1% of the portfolio value, and how that is done is we charge you 0.25% on the quarterly average. So that totals to 1% annually. So let's say you invested 100, it goes up to 110 by the end of quarter 1. We charge you 0.25% of 105, which is the quarterly average. Now, we also have a profit share plan where we charge you only a percent of the profits. Okay. So let's say you invested 100, end of quarter 1, it goes up to 110. Right? We charge you 10% of the profit, which is 1 rupee in this case. And now what happens is this operates on a high bottom up principle. So let's say Q1 you reached a certain amount, that becomes the high bottom. Okay. So in the subsequent quarters, unless we beat that high bottom mark, we do not charge you any fees. And let's say even when in quarter 4, let's say we beat that high bottom mark, we charge you only on the incremental gains from the previous high bottom. Okay. So here if you see on a quarter to quarter basis 10 lakh increase, but we charge you only 50,000 because from the previous high bottom month there was only a 5 lakh. And this keeps continuing perpetually, lifelong. It's not reset in a year, nothing. Every quarter this keeps continuing. Okay. So these are the 2 fee plans we have. Just wanted to understand which one do you resonate more with, sir?
Let me think about this.
Absolutely, sir. Absolutely. You can take your time. So what I'll do is I'll also share a summary of our discussion, all our fact sheets and information. Okay. So that you can also go through them in that time. And then we can reconnect, sir, sometime this week, and I can also show you a strategy for your portfolio. What is our house view on the allocation when it comes to your portfolio? Okay. And then we can discuss them.
All right.
What time this week can I block some time, sir, so that I can block my calendar as well?
You can do it on Friday 4 p.m.
Friday 4 p.m. I'll do that, sir. I'll share a meeting link. In the meanwhile, I'll drop you a WhatsApp message, so if you have any question, you can reach out to me, and either way we'll discuss on the next.
Sure.
Any other questions for me, sir?
Oh, thank you so much. Let me
Thank you so
let
much,
me
sir.
just go
Thank you for your
through.
time.
Yeah, yeah. Thank you so much. Thank you.
It was great discussing with you, sir. Have a great day.
Yeah, thanks. It was nice talking to you too.
Absolutely.
Thanks.
Awesome.